one of my favorite economists, rest in peace, Milton Friedman. Milton Friedman, even 20 years ago, if you watch some of his interviews, he was brilliant talking about, inflation and how crippling it is to the average person. I think inflation to the average person is just literally another tax hike, right? And I mean, because our earnings or our jobs are not paying us 5, 6, 7, 8% more every single year. So I talked about this in the past. If you had $100, you're losing 5 to 7% of its value every single year. You can believe the government if you want. Oh, government says everything is fine. Inflation is 2.8%. Is it really? Is it really? I don't think it is. So Milton Friedman, this is a new article, but he had said this before. Milton Friedman warned bad effects come later, in quotes, when you print too much money, right? So I'm going to talk a little bit about what you can do to hedge yourself against inflation and what investment classes work well, what investment assets that you can buy that works well during inflationary times. And well, to combat inflation, obviously, the top, I'm going to talk about at the end of the show, is gold, right? I mean, we know gold is a reasonably good inflation hedge. Another one is Bitcoin, right? Because Bitcoin is finite, right? And then there's 21 million of these things out there, and over 19 million have been mined already. It's finite. You can't create more Bitcoin like we create US dollars out of the blue constantly, right? So that's one asset. Real estate, obviously, is another hedge to inflation. Another one is stocks. Okay, look at the stock market. Actually, inflation is good for companies. Why is it good for companies? During inflationary periods, the companies can raise prices. Obviously, there's a certain amount of elasticity. They can't just double, triple every year. But what they do is they raise prices, and that goes directly to their bottom line as long as their supply chain is proper, right? And as we know, I talk about it. If you go to Costco 10 years ago versus Costco today, what is your $100 buying? Is it buying the same things? In fact, there was a fantastic little TikTok video I watched. There was this gentleman who 4 years ago at Walmart had ordered groceries online, right? And in a lot of these companies, Amazon, Walmart, Target, when you purchase something online, their systems keep what you purchased in a database. And when you visit the site again, it'll ask you, do you want to buy these again, right? The first thing they ask you is that. And what this gentleman did is he said he bought like 46 items, which was all, his weekly budget for essentials. We're not talking, other things. We're talking essentials, right? So he said he clicked the buy the same basket again. So 4 years ago at Walmart, he paid $143 for about 44 items, right? That include chips and his essentials, basically, toilet paper, whatever. And so he clicked it again, and he wasn't shocked. He even posted the receipts, the credit card receipts. 4 years later, the same basket of 43 items was over $400. Think about it. And our government says inflation is only what, 2%, 2.5%, 3%? Well, that looks like to me 300%. So the essentials, just like Dollar General said yesterday during their earnings conference call, people can't even afford basic essentials these days. And if you have some funds, and if you're creating a financial future, proper financial future for yourself, there are ways you can hedge inflation. And those are the asset classes, right? Commodities, okay, gold and Bitcoin and real estate for sure, because real estate, I mean, look what's happened to home prices in this country. Why is that? Home prices have literally doubled in this country in the last 20 years. Why is that? It's because of inflation. It's not because the materials they use, the replacement value has gone up, because all the materials they have used to build those homes have doubled as well. So, and home prices have doubled, rent prices have doubled. So you can hedge yourself against inflation and look at the S&P 500, the stocks, right? If your dollar cost average over the last 5, 8, 10 years, Where's your money? It's incredible, right? Because inflation is good for individual stocks, and individual stocks comprise the stock market. So yeah, those are the things you can do to hedge yourself against inflation, or to protect yourself from the effects of inflation. Um, and I want to read this little paragraph, his quote, Milton Friedman's quote: "Inflation is just like alcoholism." I completely agree. He famously stated, in both cases, when you start drinking and when you start printing too much money, the good effects come first, right? You take a couple of shots, you're feeling good, no pain. And then you take a few more shots. What happens the next morning, right? You open your eyes, the ceiling is falling, right? But this is amazing, right? This is a great analogy, actually. In both cases, you start drinking, or when you start printing too much money, the good effects come first. The bad effects only come later. 100% agree. That's why in both cases, there's a strong temptation to overdo it, to drink too much, or to print too much money. Friedman's analogy underscores a fundamental economic truth. While printing money can provide immediate relief, which we have done during the pandemic, about $8 trillion worth, expanded the Fed balance sheet, it also sows the seeds for future inflation. Exactly. This is from the old economics 101 books. And he said these things 20 years ago. They're 100% valid today. As prices soar and purchasing power diminishes, for sure, the once beneficial policies would reveal their hidden costs. Well, I couldn't have said it better myself. Rest in peace, Mr. Friedman. I think these are so valid. Certain things change, but certain things don't. But if you want to beat inflation, well, either you have to ask your boss to pay you more money every year, 5 to 8% more. Good luck with that. Number two, you have to invest. You have to invest in real estate. You have to invest in gold. You have to have a basket of investments that keep pace with inflation. So your $100 that you're holding in your hand is not losing value 6-7% every single year.